Okay, so today we are going on to the third section of our stage 2. Like I said, it's the indicators. So you see that we use indicators to just smoothen our analysis and confirm what we are seeing. So I would rather say we don't strictly trade based on indicators, but we use them to confirm what we are seeing. I think that's the most important thing to see. So the indicator should be the last thing you check. So our important things are: one, pattern. Are you seeing the 3 levels in your pair? Then you see the level count. Then we look at the timing. Those are the important things when we are trading. Anything else comes after that. So if your pattern, you're observing your pattern, you've observed your 3 levels, you've marked your levels, you know where you are going, right? Then you look at the time to see if it is close to session interchange, then you can take your trade. So after you're confirming your pattern, your level, and your time, then you can go to your indicators to see if they confirm or if it is time to end. That is what we use indicators for. Also, they also help us to confirm our levels sometimes, like we'll see at a later stage which indicators we can use to confirm our levels. So our first indicator is the moving average. So the moving average indicator plots a computed average over a set period of time. And in our case, we use the exponential moving average, which we call EMA. So the EMA period that we use are the 5, 13, 50, 200, and we can also add 800 if you want. You can also add 800. Colors: 5 yellow, 13 red, 50 aqua, and 200 is white. So those are the moving averages that we use for our analysis, right? So the EMA5 is the fastest moving average that we use. We know there's 1, 2, and the like, but we use the 5 as our fastest. And this will follow our price very closely. It can draw the M or the W or even the head and shoulder pattern. It can also draw it when you want to observe it. You can actually see it following that kind of pattern. When the EMA5 and the EMA13 cross, that's an early entry signal. Let's say we moved like this, then it goes down. Then let's say the EMA13 was following like that. When it crosses at that point, it's a signal to enter your trade. You also use that to exit your trade also. So if you are moving down, it's a W, your EMA5 will move like that. Then your 13 will come slowly like this. When it crosses at that point, then this will be your 13 and this will be your 5. When it crosses there, it's an entry signal. But for our case, first cross downwards, second cross it's going up and down again. When it crosses up again, then we are entering our trade. That is how we use the 13 and the 5 crosses. So that is our EMA5, the one in yellow. So as you can see, it follows the price very closely, right? So it's almost like the best line fitting the price movement. So like I was saying, you can see that at this point it wrote its own M, right? You can actually see the M being written by the EMA there. And also, you can write the W. You can see the W being written there, the small m and the like, the extended Ws. You can still see them being written by the moving average, the 5, because it's the fastest one. Then the 13, When it crosses the 5, it's an early entry signal. An entry can be made if the price crosses the EMA13 in the second leg. So what you are saying is, instead of this, and then the EMA13 moving like this, when your price crosses the EMA13 and closes below it, you can enter a trade downwards. If it was moving like this, if your price closes above the EMA13, you can also enter your trade. But you need practice because it can be tricky. Why? Because sometimes the EMA13 will come close to the 5, but they don't what? They don't cross. So you have to confirm a cross first before you can enter. The EMA is below the 15 in an uptrend, the 5 I mean. So if this is 5, your 13 will be following behind like this. And in a downtrend, this will be your 5 and your 13 will be following like that. It will be above the 13. So you can actually see the trend looking at those two moving averages. So as you can see now, you can see that during our M, the 5 crossed a bit earlier, went up, came down, crossed again. This will be the first cross going down, the second cross going up, the third cross going down. So it should cross once and move back, and the second cross is where you enter. So you could have entered your trade at that point, and you see how the price will move going downwards, right? So as you can see, this is a level, this is a consolidation. Again, you will see that the 513 crossed over here. If you enter, you see that you still get into a good trade. So 513 cross, very important for entry, especially for starters. When you don't have enough experience, best enter at the cross. So there will be a candlestick which causes this cross. After that candlestick, you can enter. It's very rare to lose, especially if you do it on the second leg of your M or your W formation. Then we have the 50 moving average. This shows the current trend direction. So 50 normally, if it is in the day, it will be hitting that point and going down. So the price will be below the 50 moving average in the downtrend, and the price will be above the 50 moving average in the uptrend. So again, if the EMA13 and the EMA50 cross, this confirms that you are in level 1 of your weekly cycle. So level 1 normally 15 and 30 cross somewhere there. Then the 50, you can use it as a TP target. So when it's following like this, if you enter a trade there, this might be your first TP target, right? Then it is always below 13 in an uptrend. So 13 will be up there and 50 will be following. It is above in a downtrend. So this will be your 50 and this will be your 13 moving average. So as you can now see, we have our 5, 13, and the 50. So you see that the 50, it is a bit far and it shows the general trend of the day. But then after the reversal, there will be a change. And then you see that 13 has crossed the 50 in this point, which shows a what? A level movement, especially in level 1. Then again, if you see this happening again, it's confirming again. So again, the 1350 cross, you can still use it as an entry point, the 1350 cross, right? Then the EMA200, it shows the long-term trend direction. If EMA crosses, EMA50 and EMA20 cross, it confirms level 2. That means we are talking in our hourly H1 time frame. If 50 crosses 200, you know you are now in level 2. In the 15-minute again for the day, if 50 crosses 200, in most cases, you know you are in level 2. You can also use it at the second TP. That means after the 50, the 200, this will be your first TP, this will be your second TP, this will be your 200, and that will be your 50 moving average. Then it is below the MA50 in an uptrend and above the MA50 in the downtrend. MA200 in M15 is the MA50 in H1. So the 200 moving average that you see in the M15 time frame is actually the 50 moving average in the 1 hour, right? In like manner, the 200 that you see in the 1 hour is also the 50 in the 4 hour time frame. If you do the mathematics, you see what happens there. At level 3, the moving averages get separated and they point in the wrong direction, right? So this is what you are seeing there: 5, 13, 50, and 200. So level 1, this is our high point. Level 1, you see the 1350 cross there. Then you consolidate. Level 2, you see the 5200 cross. After that, they separate to show that you are getting into level 3, right? So the MAs will separate at level 3. So now I want to see, how do we use our moving averages to confirm our count? That is also when you are not very clear, but you think the levels are moving, you can also use them as an auxiliary instrument to do your count. Remember, our first count is based on the candlesticks. That's the first one. Then we confirm using the ADR, and we can also confirm using the moving averages. That's the thing confirmation that you can also have, though it might not exactly come out the same always, but in most cases, it follows that. So you confirm level 3 by separation of moving averages. So we said there will be our crosses and the like, right? The first one crossing the smaller ones, the slower ones, right? Now, when you're at level 3, you realize that these moving averages are very far apart from each other. And that shows you that you're at level 3, whether it's level 3 for the M15 or level 3 for the H1. But remember, our level count is based mainly on the H1. That is our basic for counting levels, so that we can do our entries. So when level 3 is there, there's a separation of moving averages. Then level 1 starts after level 3 reversal. So you realize that at a later stage, the moving averages will start to come back to each other again after the separation. And you'll be in level 1. So this maximum separation that occurs is a very good confirmation of level 3. And then they start to follow the trend after the reversal is occurred. In ordinary traders are trapped and see the trend going. So you know that in textbooks and other places, they might tell you that when the moving averages are separate, then it means that the trend is high momentum. But you realize that in our case, you know that when they start to separate too much, they are actually what? Going to collapse the trend. So in our case, we trade it differently. So MA13 crosses 50, confirming that you are at level 1. MAs becomes congested at level 1 consolidation, which means at level 1 consolidation, they start to come together. Then they become congested at level 1 consolidation. MA5 and MA13 cross MA50 in the counter trend direction. Do not trade against the peak formation. So realize that you go like this, you are moving averages. The first one is crossing there. And then after that, you finish your level 1 consolidation. They tend to come back to each other like this, but then the bigger will be following there. So this will be a consolidation. Your MAs are very close to each other. The 5 and the 13 may also what? Cross. Then they will cross again at a later stage. And then that's when you you find the 5200 cross after level 2. So MA5 and 13 cross again in line with the trend, followed by MA50 and 200 cross, confirming level 2. Then ordinary traders are waiting for confirmation to enter. The MA5 and 13 come closer or even cross in level 2 consolidation. So level 2 consolidation, 5 and 13, they can still cross, but they will rarely cross 50 and 200. Then the MA single separation level 3 showing trend momentum to ordinary traders. They enter the market and the market maker reverses direction, leaving them trapped. The new trend starts after level 3 consolidation. So this is what I'm trying to show you, right? So peak formation, we're at the low in this point. Then level 1 will start, remember our W formation, right? Then your MA3 will cross, MA5 will cross the 13 here, right? Then after that, you are moving, MA3, 13 crosses MA50 at this point, confirming that you are moving in level 1. Then level 2 consolidation, the MAs come together. Then the 50 and the 200 cross, they are confirming level 2. Then the 5 and the 13, they come close to each other again, but they rarely cross, confirming the level 2 consolidation. Then they start to separate, showing that you are now at level 3. So this is the separation at level 3. And after that, you expect maybe another M formation. Then 5 comes and crosses again. Then we are moving into the other direction. So you can confirm 5, 13, 13, 50 cross, level 1 confirmation, 50, 200 cross, level 2 confirmation, coming together of MA5 and 13 and maybe 21 shows level 2 consolidation. They separate again, and also all the other MAs are going into separation. You are going towards level 3. At maximum separation, you are at level 3. You are waiting for a reversal that should come. That is how we use our moving averages to count our levels in our cycle. So that is how we use those moving averages. So moving averages are widely traded by many traders. So we use them as entry signals as well as confirmation of our chosen direction. They follow the price, they do not lead. So remember, it's a computation of what has happened. So they follow behind the trade. So they are useful if used together with the pattern in the level counts. The above information is typical behavior. The moving averages may not always behave in the same manner. So I'm saying this can also work as a confirmation. 1350 cross for level 1, 5200 cross for level 2. Separation for level 3. So those are the ways in which we use our moving averages to verify our count, right? Then for entry signals, we wait for the 513 cross to enter there. But with practice, you might enter before that. That is, if price closes below the 13 moving average, you can enter there, right? So the other things we use with the moving averages, we'll discuss them in the after session discussions that we will do, where we see that you can also use the moving average to confirm your M and W formations and the like. But for the time being, we want to see how we use them to count. So that is how we use our moving averages. So the next thing that we'll look at will be the relative strength index. Right. I don't know if we have any question before we move to the next.